Folks, there's no question that getting loans, getting yes answers from banks and brokers is becoming more difficult. I do not have good news for you. It is likely to get even more difficult over the next 3 or 4 months. Also, what I am seeing out there is we have a lot of brokers and banks and institutions trying to get loans done that they're not used to doing. Those might be called DSCR loans or other types. I strongly recommend, if you are working with someone who's kind of giving you the heebie jeebies, to reach out to someone I trust to at least get a second opinion. That is, of course, Jonathan here from Convoy Home Loans. And also, I want to give him an opportunity to talk about a new fund, new access to capital he has that might be able to get you rates down to 6.2%. But, Jonathan, thank you for being here. Let's talk about second opinions, because that's such a great offer you were putting out there.
Yeah, absolutely. I mean, it's the reason we want to kind of reiterate this is because there's so many people that say that they can do these DSCR loans and these non-QM loans right now. Unfortunately, a lot of these lenders have not experienced it before, right? So they're offering it because they want to grab as much market share as possible, but they
They're
have no
starving.
experience
Jonathan, just
really.
say it. They're
Yeah,
starving. Just say they're starving. Come
they're
on.
starving. They're starving. They're starving. It's the truth, right? They want anything that they can get. And unfortunately, that means that for the average consumer or someone that, for the listeners, we've seen a lot of like estimates come in, quotes come in that are far inferior, right? If we're talking plainly, far inferior than something that they could qualify for, either on the rate side or the loan to value side, on the leverage side. And they're being told so many things that are incorrect, that we're seeing. And then obviously we say, okay, well, you know what? Sorry, we can't help you personally, because if they're telling you that, they're saying that they can do it, fine. There's nothing that I can say to convince you, because my product looks inferior to theirs in your eyes right now, because they told you that what you wanted to do is possible. A month or two passes. Hey, Jonathan, or hey, Dustin, you were right. I'm in a bind now. I really need you to help me get it out, right? And at that point, it's like it's harder for us to work, right, timeline wise. But so it's very important, I think, up front to get a second opinion from someone that knows how to do these loans, right? I mean, about 80% of our business is non-QM. Conventional FHA, VA, I tell this to, or at family, I tell this to all the clients all the time. Everyone can do it with their eyes closed. Like that's
Yeah,
all
it's
button,
a
button,
bot.
button,
It's
button.
it's a push a
Yeah,
button. Approve eligible.
exactly.
Yay!
Yeah, exactly, exactly. But stuff like DSCR, stuff like, bank statement loans, like there's so much creativity that has to go into the back end of it that people don't see. And it's, we like to operate on just giving you the truth, right? We've told clients it's a bad deal. It's not a good deal. You shouldn't take it. We've told clients, hey, I mean, if you really want to do it, I mean, I don't want to turn it away, but like, I really don't recommend you do it, period. Or we've told clients, hey, whatever the person's telling you is not real. And unfortunately, we get a lot of people that kind of go back and forth and try to see what'll happen. But you have to remember there's so many people offering crap out there right now. It's just the market. Everyone's starving, like you said, like I said. So they are literally grabbing at straws to try to get something. And meanwhile, we're over here. I mean, we have a track record. We have a proven success record of the last 2 years when DSCR loans, when they first came on. If you go to the first video we ever talked about with Michael Zuber, it is 40-year fixed interest only loans,
Yes.
DSCR, right? We like publicized everything prior to even it becoming, a thing that everyone else was doing. So we've been doing it for, even before then.
Yeah.
So, in a situation like this, definitely reach out to us, get a second opinion. Really just kind of, I think it takes a little bit of trust to understand that we know what we're talking about, because
Sure.
again, there's so many people out there grasping at straws. They're going to tell you, hey, we can do this at X, Y, and Z, just to get you to be like, oh, well, send me the docs and do everything, move forward. But it doesn't mean that they can actually pull through on it. Right.
Yeah.
So what at the end of the day, if the loan doesn't close, it doesn't matter. Right.
It doesn't matter. Yeah. Yeah. One of
Yeah.
the things that I love about what we do here at One Rental at a Time is not only do we come back weekly and talk about what's going on, but we also have this thing called a playlist. So people can go back in your playlist, which is just simply Convoy Homes, and see what the first video was. And you can see what we talked about, week after week after week. So people really can get to know you by watching I don't know, 10, 20, 30 hours of material. So thank you
Yeah.
and Dustin for coming back each week. So again, folks, if you are getting quotes from somebody who doesn't do a lot of non-QM loans, and again, people are starving. When they starve, they stretch, they whisper sweet nothings, and maybe they're telling you things they honestly believe, but are in fact incorrect. Please reach
Yeah.
out, get a second opinion. Let's switch
Absolutely.
gears. Interest rates matter. And it sounds like you have a new fund that's going to allow folks to potentially buy down to a rate as an investor in the low sixes. Do I have that right?
Yeah. Yeah, absolutely. DSCR loans down at like 6.25. It's kind of we're talking last video, we talked about tighter box, right? Tighter box, tighter credit guidelines. It is a little tighter in terms of what, is required, but it definitely makes sense for clients that actually fit in that box. If they're at like, 1.4, 140% coverage on the ratio, they have great credit and the LTV is, I want to say, like 70-ish. We can get down like pretty. I mean, I'm talking about you can always buy it down from like 75% LTV with lower credit at 120% coverage on the debt coverage ratio, which for anyone new listening, debt coverage ratio, DSCR, debt service coverage ratio, is the gross rents divided by the actual payment of the loan, principal, interest, tax, insurance, and association dues, or interest only, taxes, insurance, and association. But if they're doing that and they fit in that kind of bucket, they can get it down easily to like 6.25 right now on a 30-year fix, which
Wow.
is in this market is kind of unheard of. It's less than conventional, obviously. And but again, it's a very tight box. So reach out to us and ask us, hey, do I fit in that box?
Yeah. Am I
Because
one
you
of the
may or may
five
not fit
people
in it.
that fit in that?
Yeah, yeah, but there are. I mean, we're putting loans in at
Yeah.
that category. I mean, obviously not in California, but across the country, yes, right. So if you fit in that box, reach out to us. We're more than happy to see if you can actually fit in. And if you don't, you're still gonna get a better deal than I promise you. 99% of the rest of the market that's offering DSCR loans, guaranteed. Just because our rates just go way lower. So just reach
Reach
out to
out.
us, see
Let's
if you
see.
fit in that box. Yeah,
Yeah.
exactly, exactly.
Yeah. And again, I want to make sure this is for investors, obviously, investor loans,
Correct, correct.
DSCR, obviously.
DSCR
Um,
loans.
is it 1 through 4?
Yeah, 1 through 4. We can go 5 through 9 on the same program. It just requires like 35 down at least.
Okay. And these are units
Yeah,
we're talking about, 1 through 4 units, 5 through 9 units.
correct, exactly.
30-year fixed.
30-year fixed,
I
fully
like it.
amortizing.
Fully
Yeah, yeah.
amortizing.
I mean, it makes sense for a lot of, especially if your loan amounts like, and this is a bucket that would fit for, let's, just put it out there as an example. If you have a property purchase that you're doing at like, let's say 200, 250,000, and you do 25, 30 down, right? And the rents that you're receiving are like $3,500 or $3,000, you might fit in that bucket,
Yeah.
right? You may fit in that bucket, and that's something like that if you fit in that, again, like I said, that little circle, then it's definitely something that can work out for clients in general. And I think that like these niches are kind of where we need to kind of seek out these days, and that's what we do. We
Yeah.
look for those niches to be able to bring it to you guys so that everyone listening can be like, hey, if I fit in that niche, then I can actually get the best terms. Or if I don't, worst case scenario, promise you're getting a better deal than 99% of the market just
Yeah.
because of the access to funds that we have.
Yeah. And again, folks, go back and watch video number 1 from this week's discussion talking about the title lending box acting like a rate increase. Because again, there is a lending market, not just a housing market. A lending market's getting tighter and tighter. You must work with a professional who's willing to seek out and spend the extra effort to see what they can do for you. And I suggest you reach out to
Absolutely.
Convoy Home Loans. How should they do that, Jonathan?
Go to convoyhomeloans.com and please let us know you came from ORAT so Dustin or I can reach out to you.
And again, when you do that, you get one of the 2 principles of Convoy Home Loans. You don't have to deal with,
Yep,
anybody else. So thank you, buddy.
exactly. Thank you.